Hello, welcome to the Running Trader. Okay, so today I'm going to show you a trade that I took out yesterday on the Euro USD using Bollinger Bands and the RSI. I don't normally trade Bollinger Bands and RSI, but I thought I'd give it a go, and actually I was surprised by how easy it is to trade. Okay, so here is the chart of the Euro USD, and on it we have the Bollinger Bands, which are the three lines here. The middle line is the simple moving average, 20 period. And the outer lines are two deviations away. But don't worry about the technicalities, because the chart you have with your broker will automatically set these as defaults for you. All you need to know is that normally when the price goes above the SMA, it means that that's a buy signal, the price is going to go up, and when it goes down, it's a sell signal, the price is coming down, which is what happened here. Okay. Now these outer lines here, the outer Bollinger Bands, they indicate that when the price has hit that, it's hit the furthest point away that it's going to hit. So for example, these two hourly candlesticks here on the hourly time frame, when they've hit here, they haven't gone any further, started to go back up here. And as you can see here, where it's hit here, it stopped here, we've got resistance here on the wicks, and it's starting to come back down here. And this is where I took the trade actually. Now the blue line here, the horizontal line, this is my stop. So I took the trade here, took it at 10,728, okay. My stop is 10 pips away. It's above the wick here, above the outer channel here. And in fact, last time it actually hit there was Friday at 1 p.m. Bear in mind, it's Tuesday when I took this trade out, okay. So I took it out at 10,728, okay. And the reason I took it out at 10,728, as I previously said, was, look, it's hit here, we've got two wicks here, it's not going to go out any further from the channel. We come down to the RSI and we look at the RSI, and here, when the line starts going down, that indicates the price is going to start coming down, okay. And that's exactly what it did. And in fact, I got my 20 pips in the first couple of hours. It went down to 10,690, but I didn't actually take it. I actually went to see what would happen, and actually the price did come up, but it didn't cross the SMA here. In fact, it met resistance with these two wicks here. So I'm pretty sure it's going to start coming back down again. And as you can see, we've got this nice trend here that went all the way down to the end of the day, which is when I took my profit. Okay, so I started at midday. Bear in mind I'm in the UK, to up to 10 p.m, which was the end of the Forex day. If I'd held, it would have gone down a little bit more. By the time I woke up, I probably would have lost some because it's coming back up again. And if I held it past 10 o'clock overnight, I'm going to incur overnight charges. So 60 pips when I was originally looking for 20. So my stop was 10 pips, and I'm looking for double amount to 2-hour return. In fact, risk 10 and I got 60 6-hour return. So I'm more than happy with that. And if you do something like £10 per pip and you get 60 pips, that's £600. Even with the 20 pips, that's £200. So technically you'd be risking £100, and in the end you get £600. So it's a really, really good trade. But I could have been quite happy with the 20 pips. That would have been more than enough. But I wanted to see what would happen, and because it didn't come above the simple moving average again, I was pretty sure they would carry on down because it met this resistance here on the two wicks. And we go back to the RSI, as you can see here, when this line crosses the bottom line here, the 30, normally means the price is oversold. And as you can see, even though the price hasn't hit the lower bandwidth, it is starting to go back up again. And now this is on Wednesday, and this is UK time, and this is 8 o'clock, just after the European markets open at 7. As you can see, it's starting to come back up again now, just about crossing the simple moving average, but sort of holding steady there at the moment. So this is the hourly chart, and you can try on other charts like 4 hourly, 30 minutes. This just happened to be the time frame I use for this particular trade. But actually I should be using this strategy again, because I think it's quite an easy, simple strategy to use. It's very similar to Donchian channels, which also show the price channel. This includes moving averages, which I'm used to trading with the moving averages. But then it also shows, the volatility, the outer price bandwidth. It gives you a lot of stuff that you can tell by looking at it. And also the RSI as well. Combined with the RSI, if you combine the two indicators together, I think you've got a good probability of getting winning trades with this. So I should certainly be using this again and using it more often. I think it's a really easy and simple system to understand. I think it'd be quite good for beginners to use as well. You know, the chart's not too cluttered. You can easily see what's going on, and you can use it for price trends, price reversals. I think it's a good all-round tool, and you know, I'm very happy with my trade yesterday, and I'll certainly be using this again. Yeah, it was a good day yesterday. I shall see you on the next one.